Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure once again to reintroduce Mr. Darren Sinden, market commentator at Admiral Markets. Darren, how the devil are you, sir?
Very well, Nick.
You had a long weekend.
Well, I was working from home on Friday, so I
used to love that.
Just wasn't in the office, but believe me, I was pretty busy.
Right. Just before we go through the slides, I saw a headline they're talking about Greece being sorted out at 4 o'clock Central Eastern Time.
Yes. I mean, we had a deadline for a deal to be done yesterday, and we were told last week one was going to be done Thursday or Friday. But they're being quite specific, aren't they, with a 4 o'clock, or the chatter is quite specific with a 4 o'clock deadline, 4 o'clock Central European Time, I believe. It is. So. Let's see what happens. It'd be great if there is some accord to be done. Let's hope it's not just a fudge, though, that pushes the issues, further down the road.
OK, well, let's kick off the first slide today. Data released over the European session. What's caught your eye this morning?
It's been really all about PMIs, the Purchasing Managers Index data today, and we've focused here on the manufacturing PMIs. So it's a bit of a mixed bag, as is the case really with Europe. Economic data at the moment. So Germany, a read for them for May of 51.1. That was obviously showing growth, i.e. above 50 but below the forecast of 51.4, and perhaps more disappointingly, well down on the read that came from April of 52.1. The flip side to that was Spain, which just can't put a foot wrong at the moment. Spanish manufacturing PMI for May then 55.8 versus a forecast of 54.5. What struck me was that's the best number they've had for 97 months. So whilst the rest of the European Union and the Eurozone economies, there's a question mark about how they're doing. Spain, having been through all that pain, certainly looks to be coming out the other side, obviously coming off a lowish base, but nonetheless, keeps putting in good numbers. Italy also, it has to be said, has a positive number, and that was a sort of a 49 month high for them. So for the Eurozone as a whole, if you like, the blended number, 52.2 versus a forecast of 52.3 and a prior read of 52. So up, but below forecast, but
just by a smidge, though.
Yeah, but heading in the main direction, or the right direction, I should say. For ourselves here in the UK, we had a read of 52. That was below forecast of 52.5, but it was at least ahead of the April figure of 51.8. So a bit of a mixed bag, and plenty perhaps there for the government.
But the key thing, all the levels being above 50. So.
They are, but as far as the UK is concerned, the UK numbers concerned, people would like to see that moving more positively ahead, to get the momentum back into the economy again, but we'll have to see what happens there.
Understood. OK, so let's take a look at the FTSE 100 movers this morning.
OK, well, I've focused on a couple of stocks that took my eye, both beginning with A, just by coincidence. Ashtead Group, plant hire in the US, had a shocking week last week. 2 days of dreadful losses, back-to-back Thursday and Friday, but they're up 2% today, and they're stabilising really after the sharp sell-off last week. Followed comments from the CEO of USP United Rentals, and this chap was speaking at a conference in the US, and he happened to sort of hint that May had been a bit softer in terms of revenues for United Rentals. Their stock was smashed, and Ashtead followed suit. Perhaps he wishes he didn't open his mouth, but Ashtead, 2% better. They've got quite a bit to make up, but they do seem at least to be stabilising now. AstraZeneca up around 1%. As we come on air, and I should say, sorry, AZN-LN, not US. Positive update on a lung cancer drug. They were up considerably higher, though. First thing, I'm thinking you'd have mentioned that, but I suppose just really good news from AstraZeneca about a drug, hopefully reminding the investors why they rejected the bid from Pfizer last year.
Right.
And we'll have to see if the management can continue on that positive path.
Understood. OK, so let's turn our attention to M&A, rumours and movers.
OK, well, there's a question at the top of the page. Consolidation in specialty chemicals, ? And it seems as if that could be on the foot in Europe. A German company, Evonik, which I have to say was a new name to me, but it turns out it's what was the old De Gasser Group, said to be interested in acquiring both the Swiss rival Clariant and perhaps the Dutch group DSM as well. Clariant shares are up 2.29%. The Dutch stock DSM pretty unmoved really on that story. They're actually down 0.59%. If those deals went ahead, and I think there'd be quite a few competition question marks if they were to go ahead, but if they did, that would be deals worth around 18 billion euros on current prices. And in terms of what would be the drivers for that acquisition, it's really all about products and portfolios. So much like lots of other businesses, like the oil business, like bizarrely enough, the pharmaceutical business, it very much is about what people have got in terms of established products and customers, and what products are in the pipeline, if you will. Why this is of interest is because in terms of sector size, it's very much a bigger business in the US than it is in Europe, certainly in terms of the number of companies involved. In the US, there are 47 individual companies in the specialty chemicals sector, including big names like Sherwin-Williams and Sigma Aldrich. In terms of the history of M&A in the sector, we saw a 13% rise in M&A in specialty chemicals in 2014 compared to 2013. Deals were done worth about $82 billion. Interestingly, though, that's well below the peak for this sector, which was in 2011, where we saw 151 billion worth of deals and the 10-year average of 92 billion. Nonetheless, there's reason to think that if we do see these acquisitions go ahead in Europe, there would be similar plays in the US. China and the US have been the biggest players globally, and interestingly, M&A has been driven by a mix of both trade and private equity buyers, both with
the sector. Okay, so let's take a look at the US data points that we should keep an eye on today.
Quite a bit coming out in the US this week. We start today with personal incomes for April, forecast to rise by 0.3% after a flat read for the March figure. What's interesting here to note is that the whole personal income number has been trending down since the turn of the year. So a positive number would be a definite bonus. If we see another flat or negative number, that would be a big disappointment. US manufacturing PMI for May also due out later, forecast to come in at 53.8. The prior read 54.1. Just to put this all in context, those numbers are down from the high of 57.9 in August 2014, so still some way to go to get back to those levels. And then the other big economic number in the States today, the ISM manufacturing number for May 2015, forecast of 51.8. The prior read was 51.5. And again, just to put this into context, that's down from the high of 56.8 in September 14. So again, we're looking for a more positive number and hopefully...
But still off the highs, understood. Okay, so let's take a look at the US pre-market movers and some chart levels.
Okay, well, Humana's the first stock that's taken my eye this morning. It's actually HUM US. It's a healthcare insurer, down 1.5% on the day, but it's down after it jumped 20% on Friday following a Wall Street Journal article suggesting that the business is up for sale. So watch this space. Aetna and one or two others being talked about as potential acquirers there. I'm sure we'll hear more about that in the coming days. And then Altera, the US chip manufacturer, which we mentioned a couple of times recently, including Friday, I believe. Intel have finally shown their hand and confirmed a bid at $54 per share. So the stock's up 5.7% pre-market at 51.65. So, that sector continues to consolidate as we suggested it would, and there may yet be more to come. In terms of levels to watch today, European equity is generally easier than we were talking about last week. So as far as the FTSE is concerned, 69.60 on the downside and 70.62 the upside level to watch. The DAX obviously come off quite sharply over the last few days, so 11,323 is our new downside level to watch. It's a bit tighter the range today, so 11,450 on the upside there. To be fair, not too much change in the US indices. We've just tightened them slightly. 21.13 the downside level in the S&P, and 21.21 the upside. And for the Dow, 17.924 the downside level and 18,130 the level to watch on the upside. Currency wise, euro a little bit easier again, so 108.88 is the level to watch on the downside, plays 109.75 upside. The Aussie's actually been quite static, so we just tighten the range here. 76.13 to the downside, 76.73 the upside level we're watching now. Dollar yen pausing for breath perhaps here, 123.58 on the downside and 124.46 on the upside. And cable, the pound continues to weaken, so 150, 165 a downside level now, and I've gone with 153.00 as the upside level to watch.
Okay, Darren Sinden, market commentator, Admiral Markets, thank you for that. Just to repeat, there seems to be some movement on Greece, and what time is it?
4 p.m. CET.
CET. Have a good day. We'll be back at 1 o'clock tomorrow. Thank you.